Welcome back. In this class, we're going to go in depth with understanding how to short cryptocurrencies such as Bitcoin, Ethereum, or any other cryptocurrency that is available on the futures market. Now, it's very important to note that this step will literally be the same irrespective of whether you're using Binance, Bybit, or any other cryptocurrency brokerage that is available out there. Now, let's first understand what is shorting. When you're shorting an asset, you're basically betting against that asset that from the time of you placing the trade, the price of that asset will actually go down. If the price go down, obviously you make money, and depending on your leverage. Again, if you're just stumbling across this video, this is class number 12 of the ultimate guide on how to trade futures contracts. So make sure that you're always watching from class number 1 to class number 20 in order for you to get all the information you need to trade the futures markets, because this is a very dangerous thing to do if you have no idea what you're doing. Now, back to what is shorting. When you're shorting an asset, you're basically betting against that asset that from the time of you placing the trade, the asset is actually gonna go down. If the asset goes down, depending on your leverage position, you actually make more money, because on the futures market you can actually borrow funds to actually trade with those funds. Now, to make a perfect example, if you're trading on the spot market, you're either buying or selling a cryptocurrency. However, if you're trading on the futures market, you are either going long or going short. So when you're actually buying on the futures market, you're going long. When you're selling, you're going short. So basically, these are the two differences here. Now, it's very important to note that contracts on the futures market are different. Again, refer back to all the classes, especially earlier classes within this course. Now, in those classes, we cover different types of contracts when it comes to trading the futures contract. Now, in this class, I'm actually going to be showing you how I trade or how I short cryptocurrencies such as Bitcoin, Ethereum, or Matic. Now, I already have a trade that is a short trade, meaning I'm betting that the price of the assets that I'm trading is going to go lower from the time of me placing the trade. Now, I'm going to be taking you step by step with regards to what exactly am I doing from the time of placing the trade to actually taking profit. Now, let's dive into the screen and let's get started. Now, if you're trading on Binance, just make sure that you click on futures, then select your contract, then start trading. But for this class, I'm going to be trading on Bybit, and I'm going to select futures contract and perpetual futures contract. Now, let's get started. All right, so I'm just going to come here to my positions. You can see that I'm currently on a position that is currently on a loss about $12. But if I move to close P&L, you can see that I did close yesterday about $52 in profit. Remember, we started with $30. Now we are able to close $50 per day. Now, let's move up here. Let me just zoom in here and exactly show you what's happening here. You can see on top, I've got a limit order right here. And then I'm also expecting the market to, come down. Let me just move that. Now I'm expecting the markets to come and trade sideways here before, moving further down. So that's what I'm expecting, and I want to capitalize on that. Now you can see here's our limit order. That is going to be an order to actually scale the trade. All right, so let's quickly talk about scaling your trade. You can scale in and out of a trade. Here you can see that I've got a position which is currently a losing position, and on top you can see that I have my limit order. Now you may be wondering, why do I have a limit order when I already have an ongoing position? It's simply because I know there's a high possibility that the price may go up a little bit before retracing back. Now I want to take advantage of that with scaling the trade instead of actually having my stop loss. So most traders will actually have a stop loss here on top. But in my case, because I really believe that the price is going to go down, I want to scale the trade and take advantage of the price movement. All right, so here we are about an hour, and you can see that trade, that limit order has actually been executed, which means we were able to scale in on the trade. Remember, we scaled on a losing trade. So instead of just having a stop loss there, I'd rather scale in on the trade so that, takes my entry position a little bit higher, and making sure that I don't put a stop loss and I don't lose money, because I'm still anticipating that the market is going to come down to at least these price levels. In fact, I think this is going to be, a point where the market really, turns. Now I can obviously, go ahead and put my take profit and stop loss. And for example, here, I'm just going to type in 1.4, 1.44 or 444. and you can see that I will be making around about 60 to 78%, and that's around about $100 in profit if obviously the price come to touch those price levels. Or maybe let's just move this to 944. I'm going to confirm that. You can see it's $100 here, $104 in profit. So that's what I'm looking for now. Remember, we started with $30 and now we should be able to make $100 per day or per a single trade. That's what we're looking for, and that's what it takes to actually grow a small account. So I've got that executed. You can see now I've got a stop loss there, and I'm expecting the market to come and touch these levels. I'll also check on the trade few hours from here because I'm still expecting, you know, the price to be trading above the yellow line. Now if you come back here, you can see that I already added another scaling in on the trade off camera, even though I don't think that's going to be triggered, but anything can happen. The price can push up there. So what I'm expecting to do, because you never know with cryptocurrency, they're so volatile. So if it does push up to those levels, obviously that trade is going to be scaled in again. You can see now I'm actually losing about $20, but there's nothing to stress about. Let me switch to trading view and actually show you where I'm actually doing my analysis. You can see this EMA ribbon. If it does take this curve, you know, going down like that, that's going to push the price lower with it. So which means the price can go up a little bit and then come further down right here. Even though that sketch is really terrible, but yeah, that's where I'm expecting the price to come to. Let me just delete this and delete this one as well, and maybe bring this tool. So basically this is where we're trading around this price range, right? So I'm expecting the price perhaps to move up just a little bit. If I can just drag from here, and then, you know, it will bounce off here and then come down. Maybe that's the top, then come down here, and that's where I'm expecting to obviously take profit. And I want it to actually come down round about this price range, right about here. Anywhere from here or even lower, I'll be able to, you know, take profit and be happy about that. All right, so here we are. I think this is about 3-4 hours later, and you can see the markets did exactly what we were anticipating. And it's funny how it just followed our line that we drew here. Look at that line. Let me just zoom in here so that you can actually see exactly what I'm talking about. Let me zoom in round about here. Look at that. The market moved sideways, then boom, it went down. Now that's crazy because that is so precise. And now you can see we're about $50 up in profit. You can see about $31 or rather about 31%. I'm going to zoom in here, and I want to just make this a little bit brighter for you. Maybe you're unable to see, so I'm going to click on that and change the color perhaps to white, and change this one to white as well. And you can see how the market just went sideways, and then boom, it started following the path that we actually drew, you know, earlier in the video. So that is really crazy, and that's sort of like precise. And that's what I always, you know, talk about when I talk about understanding what is most likely will happen next on the market. That's what gives you an edge as a trader, to sort of like know the overall sentiment of the market. So even though the market, you know, seems to be on a bull run, but just understand that sometimes you get a fake out, and this is exactly what was happening in this case. The market gave us a fake out, and now we are able to capitalize as the market is coming down, and we are shorting you know, the market. Again, like I said, you can short cryptocurrencies such as Bitcoin, Ethereum, Matic, as I'm shorting Matic right here. So you can short basically anything that is available on the futures contract. So I'm checking up a few hours later. You can see we are up by $71. So we are getting closer and closer to that $100 mark. Then I'll close the trade completely. Or I can also remove the take profit, because now I'm going to be off camera, because I don't want the take profit to hit. As you can see, I'm removing that. I don't want the take profit to trigger while I'm off camera. So I like to record all the things so that I can actually show you everything in real time. As always, I can use something called trading stop loss, but we're going to talk about that in future classes that are coming up next. I think around about class 19, class 20, around about those classes. That's where we should be, understanding what is a trailing stop loss and how to use it. But anyway, if you click on the trailing stop loss, you can then put the percentage that will actually act as sort of like a resistance. When the market retraces back about that amount of percentage, then the take profits will be triggered. So it's something very simple, but we're going to touch on it in future classes. All right, now we are back, and look at that, we are up by $82. And what's insane is that you can see over here that it actually came to hit our take profit. But remember what I said earlier on, I removed the take profits because I didn't want to actually the take profit to be triggered while I'm off camera, which is very nice. So everything was valid, but I'm still expecting the market to actually go further down. You can see the EMA ribbons are closing. Remember, when the EMA ribbons close, it actually changes direction. It's very important to note that when the EMA ribbons close just like that. So that's what I'm expecting, and that will actually push the market even lower. So maybe I can use a trailing stop loss and actually make sure that I get as much profit as possible from the trade. Now you can see right here, look at that as well. Whenever they meet, it actually changes direction. It's very important to take note of that. Now I'm probably going to make a separate class where I'm going to go in depth with understanding the email ribbons. Look at this, we are now up by $300 on this account, which is really crazy. And that's the whole point, to show you guys that you can take a very small account and turn it to a very big account. Now you can see we are up by $85 today. So what I can do now is I'll just measure from the top here and bring that down here, and that should be my take profit right there. So now I can add take profit and put that price, and that should give me around about $112, $115, around about those price range. So that will be my new take profit. And I hope you did enjoy this video on how to short cryptocurrencies. So in the video coming up next, we're going to go in depth with understanding how to go long, in cryptocurrencies such as Bitcoin. Even if you're trading stocks or S&P 500, the same thing is true. You can apply the very same techniques irrespective of what asset you're actually trading. So go ahead and click on the video coming up next where we go long in cryptocurrencies. I'll see you there. Goodbye.